Be brave, believe, be bold.
Why did you decide to sell Ergo, John?
But as a CEO, that's your job. I'm sounding like Roy Keane now. But your job is to put the best team on the pitch that you can find and you can afford. And that's spun out to a business that's heading for a $2 billion valuation today. So out of that absolute disaster, like I will ever forget that phone call.
Drive still as strong as ever?
Absolutely.
Will you ever get back into a CEO role?
This week's podcast is sponsored by Top Design Consultancy. Looking to elevate the ordinary into extraordinary through branded experiences? Visit www.wearetap.ie or email hello@wearetap.ie for more information.
John, thanks so much for coming onto the podcast. We really appreciate your time.
Great pleasure to be here. Thank you for inviting me.
How's life been post-sale?
It's a bit surreal. I described it to somebody today. It's like winning an FA Cup final but not getting the medal yet, because we still have to go through regulatory approval and so on. So my bank balance hasn't changed, but hopefully we'll go through that process over the next couple of weeks.
Very good. Well, best of luck with that.
Thank you.
So, John, after 33 years, you grew Ergo to a 250 million plus business, 750 staff and offices around the world. It was announced a few weeks ago that you sold your majority shareholding with your wife, Audrey. Obviously, a massive congratulations to build a company like that with an Irish HQ and fully bootstrapped is an incredible achievement. Why did you decide to sell Ergo, John?
So Ergo was always going to be a business that was going to be sold. So Ergo was never going to be a family business. And as a family, we discussed that with our two sons. And collectively, we all decided we didn't want succession to our children. Purely on the basis that no matter how good or not they are, they're always going to be daddy's son. Mm-hmm. I also wanted to maintain a very strong relationship with my sons. And I've seen family businesses do this really well. And when I say that, I always reference the Port West business in Westport, the Hughes family. And I've seen where it's absolutely driven a wedge through families and destroyed families. And that's not something that we were prepared to take the gamble on. And so at a relatively early stage, we spoke to our sons. They agreed with that concept. And whatever they want to do, they should do. If they want to be entrepreneurs, well, then let them be entrepreneurs. And it'll be their business. And if they want us to be shareholders in that business, well, that possibly will happen. But that's their journey. This was our journey.
Yeah, when you look back on all that, was there any main concerns you had going into the sale of the business, like other than not giving it to the family? Was there anything else that worried you about going into the sale? So when you run a company for 33 years, you are intrinsically linked to that business. And 4 years ago, in the summer 4 years ago, so when I was maybe 5 years ago, when I was 58, I spent the summer thinking about what is the next step. And I had plenty of energy for this business. I had plenty of grow. We could continue to push. But I fundamentally did not want to be a CEO in my mid-60s that was doing any kind of an earn-out or a transfer to another entity. To me, that was like handing over my child to be reared by somebody else. I'm not sure that would have been good for me, for the staff, for our customers, or for the new buyers. I just didn't know how that was going to work. And, you know, like most owner managers, you don't really have a boss. You don't have a boss. So I wasn't really sure how that was going to work. So as part of the process, I felt I wanted to separate myself away from the business before the sale. So there will be
a new momentum with a new leadership team, a new leader. That new leader would drive some changes, and maybe changes that I wasn't prepared to make, but that Paul was prepared to make.
What changes are these?
Well, for instance, he would have gone into new markets that I didn't go into. He would have accelerated on other product sets that I maybe was unsure of. And he's done a phenomenal job.
Yeah.
And one of the things that I promised him and myself on the day that I stood out of my CEO role, that I wouldn't meddle. And not many people thought that I could do that. But I didn't meddle. And I would meet Paul once a month for breakfast. I'd go to a board meeting once a month. And if something that he felt he wanted to talk to me about, he'd call me. Otherwise, I wouldn't hear from him.
So you would have stepped out of the office. You wouldn't have been in the office as much.
Not anywhere near.
Okay.
Like a tiny fraction. And I'd be there for a specific purpose, like I'm going to a board meeting. And for the first couple of months when this transition was happening, so every morning I'd get up and I'd be shaving and I'd say, remember, you're not CEO, you're not CEO. So people would call and say, tell me what you think, you better talk to Paul. Customers would ring, you need to have a conversation, you better talk to Paul.
How hard is that? Like from running and it's your baby and then all of a sudden you have to just hand it over, hand it away, like?
So I think it was facilitated by the fact that we had COVID.
Okay.
Number one. Number two, if I didn't have the bones of a new chapter, it would have been much harder. But the reality is I was busy every day. I am busy every day. And that busyness doesn't come from Ergo. Yeah. So if I was sitting at 11 o'clock in the morning twiddling my thumbs, wondering, I'd be meddling. So to me, entrepreneurship is a bit like a drug. And people might find that a dramatic statement, but you're running at such speed that if you come off that ramp to a sudden stop, I don't think that's good. I think it's good for you individually from a health perspective, So my way of dealing with this was to have a new chapter. And that new chapter looked at investing in other startups and scale-ups and sitting as a non-exec or as a chair, et cetera, et cetera. So I work every day. I work full days. I always intend not to work as early as I used to work or finish as late as I used to work. That sometimes happens, sometimes it doesn't. But that's what the intent is. Yeah. It also means that, like last week, I took a week out and I went away with my wife. And for the last 30 years when I've been on holidays, I've dipped in and out. And I still dip in and out of what I do. But it's at a different pace. I don't have any operational experience for any of the work that I do. That's someone else's job. That's the CEO's job. Yeah, right. That's the C-suite's job. Yeah. Okay, I'm not here to do your job. Yeah. My ask of if somebody wants me to come in and become involved, my ask is that you might want to listen. That maybe I've learned some stuff over 30 years. You don't have to accept what I say, but just you might want to listen. Yeah. If you're not prepared to listen, well, let's not waste each other's time. Yeah. Like there's another big advantage, and I don't want to say this in the right way. I'm in a very fortunate position that I can choose the people I work with. Yeah. Yeah. Okay, so I don't have to work with assholes. Yeah. Okay, that's a great place to be.
For sure.
Yeah, definitely.
Yeah, it's liberating.
Yeah, yeah, definitely.
Yeah. So in hindsight, it seemed like a perfect exit that you stepped away for a few years. You got yourself busy. There was a new CEO, so the place was sustainable. Did someone give you advice for all of that, or was that all part of the plan, or did it kind of just happen?
So I didn't get advice, okay? I would love to tell you it was a big strategic program. On a Sunday afternoon in September, 5 years ago, Myself and Audrey went for a walk. We ended up in Dunleary Park. We sat and we had a coffee. And I said for the first time, we need to think about succession. Oh, all right. That's good. What does that mean? That means probably by the time I'm 60, which is 2 years' time, I'd like someone in to do the CEO role. Next morning, I rang our chairman. Our chairman happened to be Paul McCann. Paul had just finished 2 terms, maximum terms, as managing partner in GT. And he said, when do you want to do it? I said, time is 60. Okay, we got 2 years. Da, da, da. He rang me a week later and, quote unquote, I like driving buses. I'm no longer driving the GT bus. I'm down the back of the GT bus. Could I drive the Ergo bus? So we spent 3 months talking about what that looked like and agreeing what growth looked like, his compensation, all that kind of stuff. Yeah. And then we announced it. So for me, it happened a little less than 2 years, about 18 months quicker than I expected it to happen. I think it was just incredibly fortunate. I think it was very fortunate that he happened to be available. He and I had a working relationship. When we did the MBO of my original business partner, Tim, God rest him, Paul was the M&A guy that represented me. Then Paul became our chair. So we knew about the company, didn't know much about the business.
And you knew him as well.
Yeah.
And was anyone else ever considered?
There was a couple that dropped away.
Okay.
Yeah, that dropped away. Yeah, and you know, Paul is a great deal maker. Yeah. He's a great networker, and you know, in the 4 years since he's been in situ, we've had one minor disagreement, and that minor disagreement was around he wanted to buy a company. So just backtracking that a little bit. So in the when he joined, we were in the middle of buying a company called Assistec, which I had started. He finished. Then he bought a company called Bootstrapped, which the team have turned around and is doing extremely well. And there was another company, and I didn't like the other company.
Why not?
Because it didn't give us anything new. So when I looked at an acquisition, I always looked at was it giving us access to more customers, more earnings, more technology, more leadership, right. And we weren't getting much or many of them from that company. What it was giving us was geographical presence, and to me that wasn't enough, and we didn't buy it. Am I right? Is he right? It doesn't matter. But that was the only minor, and I mean minor, disagreement that we had in 4 years.
And if we're getting back to the sale, why now, this year? And was there a case to be made to keep things going for another couple of years, or has that crossed your mind?
So there was a couple of scenarios. It felt right. The market felt right. The business had got to a scale where I felt we could extract the right value from a sale. We went out, did a process, and you know there could have been 9 companies looking originally. That was scaled down to 3. So we had a gambit from local providers to trade buyers, telcos, etc. And these were the people who we, from a relatively early stage, got comfortable with. Felt from a culture perspective, they could take what we had, add it to what they have, and drive it on to a new level. You know, one of the things that I think is really important to me, I was the majority shareholder, was that the business had the ability to sustain and to grow. Mm-hmm. And I think Presidio gives it the platform to do that.
Okay. And any particular reason why Presidio were the ones?
I I think so. They had already bought a couple of assets in Ireland and done a really good job on them. I think it was their ambition, their global footprint. So, you know, remember we had a strong footprint in Ireland, a smaller footprint in the UK, a small footprint in the US that came about as an acquisition. And all of those needed scale. And, you know, to me, scale is really important. And I think it's going to become more and more important. You know, as we go up the food chain and look to win bigger deals with larger organizations, those organizations want scale. They do want the entrepreneurial approach. They do want the ability to get stuff done. But they also want scale. And I think as big as Ergo had become, how are we going to double Ergo in 5 years without taking in a partner? And that was the thesis behind this, really.
That thinking there, and we spoke outside, and I can see by that there's this constant drive for more.
Yeah.
How did you know, like, and I'm sure there'll be people listening that are in the process of maybe selling their business. How did you know that, like, you couldn't get a little more out of this, or maybe we're not doing it? Or, yeah.
We could have. And, you know, we were very clear that if the buying conditions were not correct, both economically and culturally and from a technology perspective, then we wouldn't do it. Yeah. But the incremental growth that we could achieve as a bootstrap business was going to become a limiting factor.
Nice position to be in, that you weren't desperate to sell either.
No. Yeah. And there had been over previous number of years opportunities to sell, but the conditions weren't right and we just backed away.
Okay. And you were willing to do another, whatever, 1-2 years if you had to?
Absolutely.
Yeah.
Absolutely.
What are you most proud of, John?
You know, that's a really interesting question. So the day of the announcement, when we announced the staff, were on a Teams meeting in Town Hall, and the first thing that I spoke about, being proud of it, is that we built a sustainable, enduring business. Secondly, and anybody who's an entrepreneur will know exactly what I mean, our ability to make payroll the last Friday of every month for 30 odd years, that's terribly important. Never wanted a situation where we were late with payroll, you were sending someone home without their ability to pay their rent or pay their mortgage, etc. I'm proud that we've taken young people into the business straight from college who are now running really large and really successful parts of that business, who are now, you know, senior members of the team, highly respected within the industry, etc., etc. I'm proud that we have been able to do 5 acquisitions. First one was in 2010. And integrated them, some with greater success than others, into the stack. Because that cultural piece in an acquisition is terribly important. I'm proud that we have been able to take senior people from other organizations and convince them to go on the journey with us also. And lastly, but by no means least, I'm proud by the fact that we have hundreds of customers who have been with us for years, who we are very grateful for and who are very dependent on what we do.
It's me and Alan have been admirers for a long time, so it's just an amazing story, a real success story. We're going to go back into Ergo, but we're going to take you right back now to the young John Purdy that grew up in Finglas. What were those years like? And if you can maybe explain where you think the entrepreneurial spirit might have came from.
So I didn't come from an entrepreneurial family. Okay. In saying that, whatever was distilled in us from our parents, there's the Ergo story. There's the Fenergo story, which is run by my nephew, Mark, which is a phenomenal story. There's my sister, Barbara, sold her distribution business last year, very successfully.
Brilliant. What was that?
It was a warehousing, distribution, logistics business called BCS. And my other nephew is now CEO of another Ergo spin-off called Flowforma. And we had to change out the CEO, and he's gone in a year now, and he's making some really positive changes. So there's something there, even though my father worked in Guinness. My father died when I was 19. There was two children below me, two sons. One was 15 and one was 11 at the time. There was 3 girls above me. We lived in a corporation or a council house, 2-bedroom, and it was 8 of us, sometimes 9 of us, as my grandmother was with us. Wow. We had a great life. We were always looked after. We never went to bed hungry. We never got up Christmas morning where there wasn't something under the tree. So this is not a rags to riches story. Nothing like it. But I did my leaving cert in 1980. My father died in 1981. He'd been ill for a while. There was no question of going on to college. So I did college in a patchwork, nighttime, a couple of other things over the years.
Is that because was more responsibility expected of you then within the family, and did you need to provide a little bit, or?
So, and even that sounds overstating. It was, okay. There was just no availability of money for me to do that. Yeah. When I was about 17 years of age, I met a guy called Tim Sheehy. And Tim was the managing director of Gatto, which is obviously a cake company. And I arranged to meet Tim because the youth organisation that I was involved in needed money. And I went and asked him for money. And he not only said, "Will I give you money?" but I said, I'm gonna work with you to get you more money. And Tim and I became friends. And Tim would have been 20 years older than me. And was, from those times on, was involved in all of the major events of my life. So he would have been at our wedding. He's godchild to our second child. In 1992, I was saying maybe I should be doing something on my own. He was saying, well, maybe I should be doing something on my own. And that's how we got together. So I had the benefit of this guy who was an experienced businessman, 20 years older than me. And if I can quote him, he had the benefit of somebody who understood what was needed in the technology space and had the energy, et cetera, et cetera. Mm. So a phenomenal supporter. It was always very clear, made very clear from him that I was the CEO and he was in the background. And that continued on till 2007. And at that point, he had turned 60 and said, time for me to bow out.
I'm thinking here, so people listening, to be in that boat, same as you, where they half thinking of going out by themselves. You go back to that moment. Why did you go out by yourself, and what advice would you have for people that are considering that?
It's a really good question. So I'd been working in a company who was involved in technology, and I was second tier leadership, and I couldn't see how I could get a first tier leadership, no matter how hard I tried or successful I was.
Why? What was holding you back?
So there was a bunch of guys there in front of me who were part of an ownership scheme, and you couldn't break into that ownership scheme because it was for 5 individuals, and there was no way those 5 individuals, they're all relatively young people, were going to retire, resign, or whatever. So the opportunity for me to move up into that scale just wasn't there. So it was either I sit in second tier or I go and do something else. So I can go and do something else for somebody else, or I can go and do something else for myself. And that's what we did.
And did you have the idea for Ergo before, as in when you were working for them? Did you have that idea before you left, or when did the idea come about?
So I suppose 6-9 months leading up to me leaving was the genesis of that of that idea.
Yeah.
Like it was, we had no children. We had our first son Connor. We had a year later. It was incredibly lean. We were earning great money. We had all of the trappings of earning great money. All that went, and we became just incredibly lean. And
How hard was that?
yeah, that's tough. Yeah. But
Hard to give up.
yeah, but it equally, I've seen other people who do it, where they go and they step out, but they don't adjust their lifestyle.
Yeah.
That's a good point.
And they overspend. They overspend too quickly. Overpay themselves too quickly, and don't give the business the best chance. Now, all of those things are personal choices.
Yeah.
I'm very happy with the choices that we made, even though for the whatever number of years, it was incredibly tough, like incredibly lean. But despite all of that, from day one, we always thought, we always planned, we always forecasted that we were a bigger company. So we had much bigger ambitions, and that drove us. And in hiring those early people, and some of those early people are still in the business today, we were able to convince them to come on that journey with us.
Where does that mindset come from? Like, where at the start of a company that you're already thinking big, and like I'm sure like all the goes with business at the time, all the struggles at that time, that you're so in the business. How are you already planning that? We're going big.
The first instinct is survival. How do I keep this thing floating?
Yeah.
Go back to the payroll. How do I continue to make payroll? And I have this debate with other CEOs in startup world. We need to know what our 5-year plan is. Really? Do we really know what the next 5 years is going to look like? Or do we need to know what the next 24 months looks like? In detail. Yeah. And big detail. Yeah. And then do we have an aspiration for what the 5-year summit's going to be? And I use language which was taken from a book that a well-known guy around the scene, Paulo D, uses, which is a scaling book, which is getting it to base camp. Okay, can we get to base camp 1? So we need to know and have a plan of how we're going to get to base camp 2. But the detail of getting to base camp 2, we don't need until we're approaching base camp 1. Okay? So we're laying the foundations. But if we start thinking about what is we're going to need for the summit, in an evolving world, with change coming at us at a pace that's just unprecedented, do we really know what the summit is? So that there has to be some level of vision and some level of plan.
So
but the detail of that is in base is at base camp level.
So what was base camp 1 for Ergo? What were you aiming towards when you first set up?
So I remember we a small group of us went away for a couple of days, And what does 10 million look like? Wow. That's 10 million. We're so far away from 10 million. Okay, but what are the incremental steps? What are we going to do in the marketplace? What are we going to do in terms of hiring people? How can we build a business with the affordable cost base, to get us to that level? And then as you start building some confidence around that, you say, well, could it be 15? Could it be 20? Could it be 30 and so on? I think coming out and making statements like, and people have done it, and I maybe I shouldn't be critical, and I'm not being critical of them, but we're going to be $1 billion business. That's just a statement, okay? Show me the incremental plans that's going to get me to that base camp.
Okay. So is that what you look for when people come to you for investment?
Proof points. Yeah. Show me the proof points. I don't necessarily need to see the end result. I need to be able to see that we're doing the right things, that we're making progress, and history has shown me that if we're doing those things correctly, we have a reasonably good chance of getting to where we need to get.
What are some examples of some of those proof points?
Customer acquisition, talent retention, customer retention, evolution on the value chain. So in other words, what I'm doing for customers today, he's not necessarily going to pay me the same amount for it. He's going to pay me in 2 years' time. So therefore, I've got to be doing something that's giving him a higher value and a better return on investment. So also the ambition of the C-suite. Do they really have it? Do they want to go? Can they read the situation? Can they pivot to where we need to pivot to, etc. So I heard Dennis O'Brien recently talking about strategy is really important. Execution is really important. Both of which I agree with fully. And when I talk about execution, I use the word exceptional, because good is not good enough. Great used to be okay, but now people pay us money for exceptional execution. And the bit that glues all of that together is culture. So does the leader infuse that culture into the business? Because the leader sets the culture. And if there's those three elements involved, generally we can deal with most scenarios.
What kind of things would you have done to set a good culture in Ergo?
I think you got to be a credible leader. Therefore, you've got to lead the team from the front and show that you're prepared to work every bit as hard, if not harder, as you're asking other people to work. You've got to be honest, transparent. Got to bring people on that journey with you. They've got to be able to buy into. So
that hiring process then, if you're doing interviews, what is it? I mean, you're sitting here doing an interview and I'm looking for a job off you. What is it that you're looking for?
Always one of the things that I'm looking for is that, are you comfortable with change? Okay. And I've said to people in interviews, if you're not happy with change, because this is an organization that goes through constant change in an industry that's evolving at a phenomenal rate. But if you're not comfortable with that level of change, then you should go and work for a competitor.
How do you test that?
Huh?
How do you test that in somebody?
Well, you know it very quickly.
Okay.
But in most cases, you know it at the interview. Sometimes you fail, that litmus test fails. But if you look at the journey that Ergo's gone on and the change, and you track it, and it is tracked, and it's visible in the walls in the office. Change is phenomenal. And if we hadn't have gone on that change journey, one or two things would be evident. One, we wouldn't have lasted. We'd be out of business. Or number two, we'd be running a small lifestyle business that will eventually run out of steam.
Yeah.
But, talented people are not joining businesses to build a lifestyle for its owner. talented people are joining a business because they want to go on a journey. They want to develop themselves. Their skill set needs to improve. They want to be able to understand that on an earning scale, they're at this level, but they can see in 5 years' time they're going to be at that level.
Okay.
And unless we can give people those kind of journeys, people are not going to join us. I'm certainly not going to stay with us.
Brilliant.
Can we go through some of those big milestones on the journey with Ergo? And then at the same time, we'd like to hear some of the setbacks as well that we had. If you can somehow summarize that for us.
Yeah. So in the very, very early days, working from the shed, it was selling remanufactured toner cartridges, 30, low cost per unit, had a lifespan, wasn't going to be sustainable, wasn't going to be enduring. So you learn from that experience. You realize that organizations back then had a big problem with document printing. So you become the printer specialist. That evolves into document management and workflow. And when we started to evolve that, we ended up working for large financial institutions, and notably back then, our biggest client was Bank of Scotland Ireland.
What were you selling? What were you selling to them then?
So we were selling IT services, we were selling software development, we were building platforms so they could lend money faster. That evolved into building applications for mortgages for mortgage providers. That turned out to providing services to banks. That was a hell of a journey until the financial crash hit. And all of a sudden we had 40% of our income were coming from banks with no money because banks didn't want to lend anything anymore. So
that was just gone overnight.
So what do? Do we take all of these talented people and we say thanks? Or do we try and figure out how do we keep these people productive? And that became the genesis of the Fenergo business. And that's spun out to a business that's heading for a 2 billion valuation today.
Wow.
So out of that absolute disaster, like I will never, ever forget that phone call. I had just finished my last day in Stanford in California. I'm standing in the airport and I get a phone call from Mark Murphy, who's now the CEO of Fenergo. He was the sales director in Ergo. I was on my way to Boston to meet my family for a family holiday. It was the 3rd of July. And he said, it's all over. What's all over? He said, all our pipeline and banking has just evaporated in the last week. I said, you're exaggerating. He said, I'm not. And the 4th of July, I arrived in Cape Cod, and at 8 o'clock that morning, and 8 o'clock my time every morning for the whole duration of holidays, there was a 2-hour meeting to say, what are we going to do? So the options were get rid of all the staff, or let's see, can we scramble some income from somewhere to keep them guys going until we figure out what it is. And we managed to do that. We did some work for NAMA. We did some work for, if I remember correctly, the administrators of Irish Nationwide, who had a big problem with data at the time. And we kept the team going. And then we figured out that banks no longer want to lend money, they want their money back. And there's all this regulation coming at them from BAL in Switzerland or MiFID in the US. And that financial institutions were not geared to deal with the regulation. So maybe we could build software. And we put all our effort into it. Every penny that we could get our hands on went into building this thing. And it was an incredible journey, incredibly scary. But we managed to build a great product. And then we managed to split the company out and raise money, and the rest is history.
And in a crisis like that, John, How do you deal with that? Like when 40% of your revenue is gone, like your accountants were telling you need to fire staff. How do you keep a calm mind and
I don't know.
think outside the box?
So I think you got to believe in yourself, and you got to believe in your team around you. And you know, the notebook that you're using, I have them going back 20, 30 years. They sit behind my shelf at home. And if you go back that period, you'll see on the top, you'll see big letters of B, 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 and B. So I would write that at the start of most significant meetings.
Okay.
Be brave, believe, be bold. And that was my anchor. That was my focus. Okay, that you know, well, other people around the place may have been, you know, panicking or the rabbit in the headlights and all that kind of stuff. My job was to make sure that we stayed focused and try and guide us through this. I don't for a moment pretend it was simple.
Yeah.
I don't for a moment. They were incredibly scary times. But I think you have to have that resilience. I think you have to have that belief in you and in the team around you.
Especially during those times, I'd say it was very difficult to be like the business isn't going well, and then you're trying to make another product, and at the same time that you're giving people, like, and I presume obviously money has to go into that to make it. So, like, they're risky calls and
look,
big calls.
You're gonna make tough decisions.
Yeah.
You know, you got to scale back the team.
Big calls. Yeah.
Yeah. Like I remember getting into the car one morning, and it was roughly around the same time, and we were building out a data center for Skype. Okay. And we had an account guy, a commercial guy, and he'd go over to, I can't remember, Slovakia or Slovenia, go every quarter. And he'd have a meeting with the head of procurement and meeting the head of IT, and they'd go for dinner. And he'd come back with a bloody big purchase order for a couple of hundred servers and a couple of 100 days to install those servers. And then I get in the car one morning, turn on the news, and Skype is bought by Microsoft. Okay?
And they'll do all that themselves.
End of. Over. Didn't do anything wrong. Okay? It wasn't a price discussion. It wasn't a technology discussion. But somewhere in Redmond, a decision was made to buy this business, and that was the end of Skype as an independent product.
How much of that of your business is gone?
I'm going to say 10%. Yeah. Yeah. But you know, and it's great sitting here in the cold light of day. But they're monumental things. Yeah. They're monumental things. You asked a few moments ago whether, you know, how do you deal with that? And one of the things that I learned to do, because a lot of that time you're wound up like a spring, okay? And so, you know, eventually you get home at night, and you'd walk into the house, and, you know, one of the guys would have left their kit bag in the hall, or their runners in the hall, and you'd kick them, give out, and all that kind of stuff. And what I found was best was that when I arrived in the hall, that I wouldn't even go near the family. I'd go up and change my clothes, and I'd just go out and I'd walk for 40 minutes and try to decompress. And there was a chance then I was somewhat reasonable when I walked back into the kitchen or the sitting room, you know. Okay. So managing yourself in those scenarios is very important.
So we're at around 2010, is it? With the whole
2008 to 2008 to 2010, yeah.
Okay. And then what happened with Fenergo, and where did Ergo go from there?
So Ergo, as we've already discussed, is a bootstrap business. We need a lot of capital to develop Fenergo, so we needed to go external. And we were talking to all kinds of PE and VCs, and we sat down with a great gentleman called Michael Murphy, who was the head of Investec, since retired. And he said, look, I really like what you guys are going to do, but having it as part of the one organization is not going to work. And it's not going to work because one is a services business and one is a product business. And we're not going to give you money to bolster up your services business, so you're going to have to spin this out. So I think 2011, the business was spun out. I became a non-exec on the Fenergo board. Mark Murphy became the CEO. The VC put people on the board, and we started driving that as a separate product company. And that's when it started to really take traction. But I think the really interesting thing is being able to spot innovation within the mess that's going on during a disaster.
Yeah.
Okay? And again, being brave enough to spin that out and do something with it.
Yeah.
We did similar with a company that we now call Flowforma. It wasn't a mess at all, but we got an opportunity in a client, and they wanted to have control over workflows. So they wanted us to build a platform, but they didn't want us to come back and modify the workflows every time they needed to change something. And we said, that's a really interesting idea. And that business became a business called Flowforma.
Okay.
And that's on a journey now also.
And the importance of brand is very much at the heart of the services of TAP Design Consultancy, our sponsors of the podcast. TAP for over 10 years has been helping to shape and define brands and how they turn up in the market. Whether it's within healthcare, hospitality, workplace or retail, the strength of brand is always the focal point of connecting with customers. And it's through the sponsorship of TAP Design Consultancy, we can explore fantastic conversations such as these. And if you're building a brand and want to shape meaningful customer experiences, then visit www.wearetap.ie or email hello@wearetap.ie for more information and start your brand journey today. Now, let's get back to our conversation.
So what made Ergo so successful, in your opinion?
You know, there's examples of companies that are overnight successes. Okay, to me, they're outliers. Okay, so, and one of the most impressive ones is probably Wayflower.
Yeah.
You know, it happened at a time when it was the perfect storm. Okay, I think in most scale organizations, it's a slog. Like it's day after day, week after week, month after month, quarter after quarter, year after year. Yeah. Okay. I think that's how you get a business to become almost $250 million and a business that has 700 people. It's a slog. And I sometimes talk to CEOs of companies that are relatively young, and they're talking about exiting early and taking money off the table and all that kind of stuff. And if you're using someone else's money, yeah, you can do that. If you're bootstrapping, you can't do that. So I think it's accepting that it is a slog. I think it is looking strategically at what are the bits of the jigsaw that we add into the overall picture that brings this to being a more sustainable, enduring business.
What were some of those things?
Well, some of those things will be decisions around going after certain technologies and becoming really, really, the best at those technologies. They will be selective acquisitions. It's not growth for the sake of growth. So, for instance, one of the things that Paul and I discussed and agreed is that the maximum increase in revenue in any given year could only increase, only 50% of it could come from acquisition. 50% of it had to come from organic. And that was terribly important for culture, economic, et cetera, et cetera.
Right.
Why is the organic growth so important?
Because that means that if the engine is working well.
Yeah. Okay.
Where if the engine is dependent on just...
That's a very good point. Just adding bits to it and here and there.
So
and,
you're probably you're overpaying for the growth.
Yeah.
And you're not working your engine hard enough.
Yeah. So John, you touched on it already, that program you did in Stanford, the Leadership for Growth. and you've mentioned before in previous podcasts that you have a toolkit
Yeah.
for scaling businesses. Can we get into the details of that?
Sure. And so I was on the second Leadership for Growth program, which was 2007 to 2008. Excuse me. So think about the timing of that and what the conversation we had around the financial meltdown. Okay. So it couldn't have come at a better time.
So did you start before the crash and then it continued on after the crash?
So my last day was July the 3rd, 2008, and the world was imploding.
Yeah.
Okay. But I now had a toolkit. I now had an ambition that we could scale off the island. And we had to figure that one out.
What was the toolkit? Like, what were the key learnings?
So like just very simple exercises around looking at the business from a culture perspective, and do we have the right people, and are the right people doing the right things? Are they sitting in the right seats in the bus? All that kind of stuff. You know, should they be on the bus at all?
Yeah.
And you know, without sounding overly bolshy or cavalier, like I still talk today about to C-suites about, look at your team. Look at it as if it was a sports team. Have you got the right people playing in the right position? Should we be moving those people into different positions? Should we be moving those people off the pitch? Yeah. And the team that gets you to 5 million, they have to be given a chance to get you to 15 million. But invariably, some of them won't make it. So as human as possible, we need to make that change. But as a CEO, that's your job. I'm sounding like Roy Keane now. But your job is to put the best team on the pitch that you can find and you can afford. Okay. Secondly, you've got to give the team a vision. Okay, going back to strategy, culture, execution, all that kind of stuff. The vision has to come from the leadership suite. Okay, so what is it we're doing? What is work we want to be famous for? How are we going to get there, et cetera, et cetera. We need to look at the capabilities, the abilities, the inhibitors, and square that in some way. Okay, so there's no point saying we're gonna be a provider of data scientists if we don't hire data scientists. Okay, so it has to dictate your hiring policies, has to dictate your cultural policies, all that kind of stuff.
So on the hiring and the leadership team and the vision, is there ever a stage where you feel you have to start giving the leadership team shares in the business for the business to scale?
Yes.
When is that? When is the time right?
I don't know if there's a one answer to that question. I think it depends on where the business is in terms of evolution and what you as the majority shareholder or shareholders want to achieve. So if you want to be a tight owner managed lifestyle business, fantastic. I mean, there's nothing wrong with that. Okay. And you have a bunch of people, you pay them an amount of money, they pay the market rate, you treat them reasonably well, and you achieve all that. But if you want to take a business on a journey, and you want to do it in different geographies, and you want to scale it, and you want to create real value, well then you've got to bring in, or you've got to develop a leadership team that's very much aligned. That it's not about you, it's about us and the wider us. And figure out some way of creating a compensation model that attracts and retains those people. Right. So it I think it happens at different stages of a company. Yeah. Tools like growth shares and so on are now very very useful components of that.
Thinking here, John, so you ran Ergo for what, 15 years before you did that program, roughly 20 years maybe.
2003 to 1993 to 2007.
Yeah. So when you look at that, and I'm thinking for people, listen, how important is it when you're in business to still try and get out and learn?
Well, so we're talking a lot about Stanford, but prior to Stanford, I had done a 2-year strategy diploma in the IMI very early on. Every Friday for 2 years from 8 a.m. to 8 p.m. and every Saturday from 8 a.m. to 1 p.m. And our eldest son, I think, was 1 at the time. That was tough. Yeah. Like I remember on a Saturday, at 1 o'clock, leaving the IMI and going to the office to work on the stuff I hadn't been able to do on the Friday because I was in, that was tough. Yeah. I remember in 1999, in conversation with Tim, I said, look, Tim, we need to be certain that I'm the guy that can bring this to the next level. Yeah. And he went off and did a lot of research, and he came back and he said, you're booked to go on a course in Cranfield University in Luton. And it's a 2-week residential course. And I arrived on a Sunday afternoon to this old RAF airfield. And just came down for dinner that night. The people around the course are talking about, testing, resilience, EQ, all that kind of thing. And by Wednesday, there was 24 people on the course. There's people literally falling apart. And I remember after dinner on a Wednesday, so dinner would be at 7. You'd do your last lecture half 8. That would go until 10:30. You'd have a couple of hours reading to do case studies. You'd finish at 1 o'clock. You're back at 7 the next morning. And on Wednesday, this guy puts his hand up and he said, "This is humane. This is crazy." And their response was, at some stage in your life, it's going to be something that's going to require you to dig deep. There's a crisis. You're being acquired. You're acquiring. So you need to know, and your board needs to know that you have that capability. And by Friday, we got up Friday morning, and we went down for breakfast, and they said, "I want you to go back to your room. I want you to pack a small overnight bag, and we're going to climb a mountain or build a raft or something." And they put us on a bus, and they told us to divide ourselves into a group of 3s, pick 3 groups of 8, and pick the people you want to work with. They drove us to Stratford-upon-Avon, and they told us we had 36 hours to develop a new tourism strategy for Stratford-upon-Avon. That was it. Except that every 3 hours as a group, we had to get back together. I went in the room, and in the room, there was a behavioral psychologist. And his or her purpose was to look and listen at how each individual was behaving in a group.
Wow.
So, Sean, were you really listening?
Yeah.
Alan, you were interjecting there, but was that really appropriate?
And sorry, he would give you feedback after these meetings as well?
This guy would give it.
Yeah, okay.
And they said, "John, you're not contributing," or whatever it was.
Yeah.
So there was the usual manic, everyone talking above each other. And then somebody said, hold on a second. So Sean and Alan, you go away and you go and find out who's responsible for tourism and interview them. Sam and John, you go and look at all the hotels and tell us what you think, and so on and so forth. And by tea time on the Saturday, we had to present back to the team. Okay, either no or very little sleep. And of course, the whole exercise was nothing about the tourism for Stratford-upon-Avon. Yeah. It was how you as a group were performing and how you individually was performing. Then we had Saturday night off, and Sunday we started work again. And Sunday was about building the skill set that we needed, that we should have had to do what we had been doing the previous couple of days. On the last day, which I think was a Friday, you had to write your action plan. And this action plan you had to bring back to your senior leadership team. And I remember 2 guys, their action plan was a letter of resignation.
So your team was down to 6? So your team was down to 6?
Yeah.
Yeah.
So, and that was seen as a success because they had identified that they were not suitable for senior leadership roles.
Okay.
So I put mine and said, okay, so here's what I've learned. Here's what I've learned about us as a team. Here's what I've learned about me as an individual. Here's where I need to do things differently, et cetera, et cetera. So for a very small company, 1999, what were we, 10 million? We were doing that kind of stuff that was, you'd normally expect a larger organization to be done.
What did you learn about yourself, and what did you learn about team building?
I was stubborn. Was one thing that I dogged.
Yeah.
And I stole a phrase, I think around that time, from Richard Branson, which was printed in my office, and it was JFDI.
What's that?
So just
Yeah.
effing do it.
You're allowed curse. It's okay.
Huh?
You're allowed curse.
Yeah.
Okay, so just fucking do it.
Yeah.
So I mean, you're there. You're in the meetings. We have all the debate. We've got to get on and decide. And just fucking do it. Otherwise, it just becomes a talking shop. So I learned that I did have the ability to go to at least the next level.
You were in Ergo for about 15 years before you started doing acquisitions. Is that right?
93 to 2010.
Yeah. So when should a company start to use acquisitions as part of their scale and journey?
It's a great question. I think very much it depends on the ability of the acquiring team. I should expand on that. So as you bring a business in, first of all, you shouldn't assume that all the people that you currently have should get the same job on the org chart. Because one of the reasons, in my view, you're making acquisitions because you're bringing in new talents. So your head of whatever that you're bringing in may be a better head of whatever than you currently have. Okay?
Yeah.
But I think fundamentally the business has to be mature to a point. It has to have systems to a point. There's nothing perfect. But it has to be able to manage the influx of new activity, and the influx of new customers, new staff, the cultural differences, et cetera, et cetera. And one of the things that has thankfully become norm in recent acquisitions is you hear people talking about the culture due diligence, where before that it's been financial, commercial, legal, et cetera, technology. But now the cultural piece. So, can we put these two groups of people together and expect a level of reasonable harmony?
So do you interview some of the management team before you buy them?
Absolutely.
Yeah.
Absolutely. Yeah. And I was involved recently I chair a company that was recently private equity firm came in, and they used external consultants to do it, and they did psychometric testing on the senior team so they could get a profile of each of the key people.
And how hard is it? Like, I know you can interview people and you can talk to as many people as you like, but when it actually, the company integrates, how hard is it to actually get that culture right and get everyone firing on the same cylinder?
I won't mention names, but I remember going years ago, I went into this very large insurance company, and there was quite a significant project going on. And I'd been briefed going into the meeting, that the project was going reasonably well to well. And I went into this room and I was slaughtered. And I'm going, I've been blindsided here. And the CIO walked me back to the lift and he said, look, I'm sorry about that. I said, what went on there? Oh, he said, 20 years ago, we bought a competitor. And you were experiencing the fraction that still exists.
From 20 years ago.
20 years later. And so they had not dealt with the culture thing. And he said, what went on in that room was nothing to do with you. Yeah. What went on that room was the guy who used to do my role in the old company, who now reports into me, trying to tell me that he's smarter than I am.
Jeez, 20 years.
Yeah. That's not something you learn in Stanford or in the IMI or whatever.
Yeah. Like that. Yeah, that's what I was trying to ask you. Like, you can do all these interviews and do everything on paper, but like, it's only when you get into the nitty gritty of it all that's when you really find out how difficult this is going to be. Like,
yeah.
So, John, we'll get into the next topic, which is the business landscape in Ireland, and around that leadership for growth. How important do you think that is for a country like Ireland? What was the success of that program like? And
so that program has now been run pretty much every year. A bit of a break for COVID for almost 30 years. Okay, there is about 30 participating companies in each program. The most recent one finished last Wednesday. I think from an Irish government perspective and from an Enterprise Ireland perspective, it's probably the bravest thing that we've done. It has given people belief that we can compete. I recently had coffee with Jenny Melia, who's the new CEO in Enterprise Ireland, and we both had a conversation, both agreed that we can't sit back on our laurels, that the world has moved on. And what was a competitive advantage a number of years ago will not be a competitive advantage in years to come. I saw a chart in the last week, and on a per capita basis, the number of unicorns, the highest performing economy is Israel. Right. And we're way, way, way down.
Really?
And we need to be up there. We need to get up there. There's a fundamental issue with so to finish on the Enterprise Ireland piece. I think they're incredibly brave. I remember when the CEO at the time was a guy called Frank Ryan, who's now the chair of the IDA, I think, and he was being kicked around by journalists and by the left side of government, saying this was an awful waste of money. Absolutely not. Like the economy, one of the reasons why the economy is thriving, it's because it is. Not the only reason, but one of the reasons why. Recently I was at an event that was run by Scale Ireland, and Debbie Rennick, she asked Pascal a question. 2% of pension funds in the US are spent on startups. In Ireland, it's 0.2. Jeez. Okay? And in other countries, it's anywhere either plus or minus 2%, but it's certainly no lower than 0.2. So we have all of this money sitting in people's pension funds that's not being used. And we have great opportunity to use that money, not in any frivolous way or in any risk way, but in a way that can actually really generate real activity and help companies scale. Because, startups don't have enough people, customers, money, technology. And they can't go fast enough. And we've got to help them figure out how do we make them go fast enough.
So funding is the issue.
So absolutely.
Yeah.
There's a lot of wealth in this country. A lot of people have made money. But the incentives to reinvest that money is very poor. Okay? So I exit a business. I pay my taxes. I take some of that money and I reinvest it elsewhere. And that's real risk capital. Okay? And it's not EWS money because it's money that's not coming from PAYE. It's coming from corporate activity. There's no incentive there for me to invest that money, or for people, for high net worth individuals to invest that
I've
money.
already paid tax on it as well.
Absolutely. Whereas if there was some kind of tax break to do that, so there's a tax break for EWS for PAYE workers, but there's no tax break for people who have earned money into a corporate to reinvest that money. And they put that money into a bank and they might get 3% back on it. And it's safe. Okay? But it's not generating. And the purpose of capital is to recirculate and generate more wealth. And there are two fundamental areas. We clearly there's more smarter people than me talk about the problems with housing, the problem with infrastructure, the problem with electricity. Like we are losing whatever competitive advantage we have by allowing data centers to be built everywhere else.
Crazy.
And by the way, the people who are building these bloody data centers are Irish companies. Okay?
Yeah, Cisco and
So
stuff are going.
my oldest friend is out in UAE most of his life building data centers. When he should be building them in Ireland.
It's like we're the specialists now, aren't we?
Yeah.
And we've lost all the.
So there's a to me they are the challenges. You know.
And is there anything else in Ireland you'd like to see to make business easier?
Look, there's all the obvious stuff around, reduce the bureaucracy and, all those kind of things. And we could have an hour's conversation about cost of living and all that kind of stuff. Like in the news this morning, I think I heard that. I hope I'm right in quoting this, but I think we've got the third highest wage rates in Europe.
I think I saw that as well. Yeah.
Am I saying that right?
Yeah, I think so. Yeah.
Third highest. So, think about France. Think about Germany. I don't know if Switzerland. I presume they're in that as well.
Yeah, I think so. Yeah.
Yeah, and we're the third highest. It's just not right. It's not equating.
And you've mentioned something really interesting before, that by having some mechanism for business owners to be able to take money off the table, it would help their businesses grow. What do you mean by that?
So, when you borrow money from a bank, their view is that they will not allow you to take money out of your business to pay dividends, or they'll even put salary caps on what you can take out. That's an inhibitor, absolute inhibitor. And as a result, people get to a certain point where they feel, I need to deal with personal debt. I need to, buy a better house, deal with my pension, etc., etc. And that's because of the curtailment of being able to extract money from your own business. From my personal experience is that in 2015, when we got our first payday out of Fenergo, Ergo was doing 25 million in revenue. And I dealt with those things. So all of those boxes were ticked. Now my appetite for risk is much greater.
And where did Ergo get to? What were some of the key steps?
So it went in 2015. It bought a company that I think brought to 40 million. Following year, it bought another company that brought it to 60 million. Then it got to 100 million under that steam. Then it brought a Systech that got it to 150 million and so on. But there's no way Ergo would have gone on that journey if the majority shareholder, i.e. me, hadn't been able to deal with all of those issues in 2015.
Yeah.
It's very good. Then John, looking forward, it seems like you've been planning this for a while, leaving Ergo. What's the future hold for John Purdy?
So in what I call my next chapter, I have I sit on, I think it's 7 boards that I've invested in. I want to work with those companies and see how far we can get them.
The drive still as strong as ever?
Absolutely.
Yeah.
Absolutely. Yeah. I people ask me why, and I said, we mentioned earlier about the entrepreneurial drug. And I say, what is the alternative? Yeah. So the alternative is that I'd get up a little later in the morning. I'd read the Irish Times online. I'd have my breakfast. I'd do an hour's exercise, and it's now 10:30. What do I do for the rest of the day?
You're not a golfer now.
I was just going to say it.
Definitely not. I have 2 sons who are disgusted that I don't play golf. But no, I don't play golf. So what would you do? Yeah. Even if you did play golf.
Yeah.
What would you do today where it's...
So how much of your time, you said 7? You're on the board for 7 different companies. So how much of your time goes into each one, or is it all just depend on what's going on?
Yeah, and I describe myself as an active non-exec. So what that means is that I'm not going to show up just for board meetings. I'm going to be talking to each of the CEOs and other members of the C-suite a couple of times a week, certainly once a week. I'm checking in. How is everything going? What's going on with that? Do you need help with this? Oh, we know somebody there. They may be able to help us, that kind of stuff. So that's all. I'm an active non-exec. I'm not just turning up to read a board pack.
Yeah. Will you ever get back into a CEO role?
No, I really doubt it. I think it requires a massive amount of energy and youth, and I've done that. Yeah. I don't do that again. I want to support ambitious CEOs who have a shot.
We've touched on that there. The key characteristics. What are you looking for in people that you're investing in?
So I've met a whole lot of people over the years who have been successful or moderately successful, and for some reason they think then that they can turn water into wine. Okay, biggest destroyer in business value, in my view, is ego. Yeah. There's a great book which I reference a lot called "Ego is the Enemy." I bought a lot of copies of that book to give to people.
What's people's reaction when you give them that book?
I don't wait for the reaction. I go back a couple of weeks later and said, "Tell me you've read it," and people generally understand. I think humility is grossly misunderstood. So I'm not looking for CEOs that are overly bullish, high level of EQ, understand humility, have a strong work ethic, and have a good chance that they'll figure out what they need to do. And if that means they've got to pivot on the way, they've got to pivot on the way.
Yeah. Brilliant. Thanks for that, John. So we'll move on to the final piece, which is the questions for the road.
Okay.
So what's your biggest weakness?
I have a problem saying no. Yeah.
Right.
I there's a story, I was introduced to this lady, Maureen King, and about 18 months ago. And a mutual friend asked me to meet her. And I said to the mutual friend, I have enough work, I have enough investments. And Hannah said, just meet her. And I said, but you understand, I'm not taking anything else on. And half an hour in, I was sold. Okay. And it's a super business. It's a business called I trust 6. And essentially it's dealing with the avalanche of data requests that data holders are getting from law enforcement and the like. Okay? So a judge, the Garda Commissioner, the FBI, etc., may want some information because it's part of a criminal trial, etc. And the effort involved in getting that data is huge. Mm-hmm. And Maureen and her team have built a 6-point framework to gather the information and give it back within a very short period of time.
Incredible.
Absolutely incredible.
Brilliant, yeah.
And there's new legislation coming in which will compel the data holders to have this information back in a certain period of time.
Brilliant.
I get excited by those opportunities. I get excited when I meet those kind of people, and I have to curtail myself.
Yeah, when is enough then? I know you were saying to that person that I'm not doing it again, and then you meet people like that. Yeah. So how do you manage that?
I just need to be very selective, because both from a human physical time and from a capital time, it's just not possible.
Yeah, definitely.
So it goes back to you've got to pick people who you feel you can add some value to, and people you'll enjoy working with.
Yeah, for sure. John, for those owners out there that want a successful exit, what advice would you have for them?
Have a plan. Yeah. Pick trusted advisors around you. In hindsight, I would say give it time. So, it's not I'm not going in on the 2nd of January saying I want to be out of here by September. I have to make sure that all of the ducks are lined up correctly and all the bits are in place, Yeah.
Do you think it's possible to have a work-life balance when scaling a company?
To the scale you did it to as well, 250 million revenue.
I'm not sure I've done that correctly. It's all encompassing. I'm sure others, I think, probably have it done to a greater extent. I find it really hard not to be fully on. And you know what? I'm not complaining about that because I love it. I love it. I love the challenge, the trust. It's a very fast game of chess. It's always evolving.
Yeah, brilliant. Thanks for your honesty on that one. That I feel like people can kind of go for the easy way out in that question. So thanks for your honesty on that.
That's
one.
a question you should ask my wife, by the way.
So three people, dead or alive, you'd like to have dinner with, but they can't be related to you. And why would you have them for dinner?
Can there be 4?
There can be 4.
Okay. So one would be Nelson Mandela. I think he was the absolute authentic leader that stuck to his principles and delivered for his team. And you think about what he personally sacrificed, etc., etc. The more frivolous ones would be any combination of Roy Keane, Max Verstappen,
interesting,
or Bruce Springsteen.
Brilliant. Be a nice
dinner.
Yeah,
very mixed people there.
Yeah, United true and true. My eldest son is called Keane with a K for a particular reason.
Have you ever met him?
No, but Tim, my late business partner was very friendly with Alex Ferguson. And we spent many a European night bringing customers, and we could never guarantee that we would get the text, but the text always came. At halftime, Alex's PA, Kathy, would send you a text saying, Alex, here's you're in the ground with some guests, drop around for a glass of wine.
Oh.
And then after the match, he'd make away, and he'd come in after his interviews, and he'd come in, there could be 20, 30 people in the room, and he'd come over and he'd say, hey, John, who have you got here? And I've got Sean, I've got Alan. And he'd say, shake their hands and say, if you're a friend of John's, you're a friend of mine.
Brilliant.
That's a great way of retaining customers.
That's deadly.
I'd say so, yeah.
Yeah.
So, yeah, handshake with Sir Alex Ferguson will definitely help. Definitely help business keep going.
What's the most important entrepreneurial skill that anyone can develop or learn?
So it's got to be something around persistence. It's got to be something around resilience. It's got to be something around reading the marketplace, setting out a vision, and it's got to be about exceptional execution. Like, I can't drive that hard enough into people's minds that people are not going to spend good money with us unless they're getting exceptional service.
Can you develop resilience, do you think?
Oh yeah.
Yeah.
How?
Oh, yeah. Being very aware. I think a little bit like, you have to keep your body fit, you have to keep your mind fit. And in very recent times, and it is only very recent times, I have been going to a wonderful young lady who's taught me how to meditate. So I can actually get my mind to calm my mind, so I can relax a bit. And it's an opportunity to do that 20 years ago.
Brilliant. You answered one of them anyway, I think. But what do you do to make the world a better place?
That's a hard one. I suppose in my old world, I helped build a sustainable business that hired a lot of people, that encouraged economic activity. In my new world, it's to replicate that across a number of different companies so that economic activity can continue to thrive.
I think that's something that's just so misunderstood in the world, that some people think that by you doing that, it's more and more and more, but people don't see that it's more people getting paid, more jobs, better lifestyles for everyone, which I think needs to be broadcasted a lot better.
One habit or routine that's changed your life?
So I would have ignored for too many years having an emphasis on my health and exercise. In my new chapter, that's very much part of my daily routine.
Brilliant.
What's the best piece of advice you've ever received?
Believe in yourself.
Brilliant.
Who gave you that advice?
I think quite a number of people. Certainly that came from Tim. That came from my mother. And that came from Audrey, my wife.
Brilliant. And what to you is a life well lived, and how do you make the most of it?
Jesus, these are deep conversations. I feel they should be having a gin
It's
and
the
tonic
last
instead of
one,
a glass
so.
of wine or something, right? One of the things that I can be preoccupied about is that I have two sons, two great sons. And they know that our expectation of them is to be the best version of themselves they can be, whatever that means, whether they're entrepreneurs or whatever they're doing. But given in the very fortunate life that we live, they also know, and they're not, it is would be unacceptable for them to be entitled little shits. And that's very much understood.
Class. John, thanks so much for coming on. We really think your story is one really incredible story that we hope will inspire many people, that you can build a business as big as you did, doing it all in Ireland. So look, just thanks so much for your time. We really do appreciate it. Look, we got
very happy.
We got you something small to say thanks. And you mightn't think it, but see, the message on it was there was actually a lot of thought went into that, because you have to keep it tight. You only have a certain amount of letters to use. So
Okay, well, that's very kind of you. Thank you very much.
Yeah, no, we really appreciate your time.
That's very kind.
Yeah. We didn't think we'd have someone like you on this early, but in our podcast journey. So thank you very much.
yeah,
Well, look, thanks for having me. I really enjoyed the chat. I thought some of the questions was quite searching, which is great. I hope it comes across okay when Sam does his work, and best luck at it.
yeah. John, thank you.
And
Sam, thanks so much.
Yeah, Sam, thank you.
very much.
What else we can do on a Friday evening, Sam?
This week's podcast is sponsored by Top Design Consultancy. Looking to elevate the ordinary into extraordinary through branded experiences? Visit www.wearetap.ie or email hello@wearetap.ie for more information.